However, these two markets are not connected. In terms of equities, the S&P and stock markets are distinguishing between okay, cash burn, low cash cushion, out to the woodshed. Additionally, until lately, the Magnificent Six showed no signs of concern. And now we are. According to the high-yield market, there is no genuine risk associated with the cash cushion argument. I have already examined commodity prices as an indicator to see if the bond market is correct. Finally, I'll say what we've said for a long time. While deflation is a concern, there are other risks as well. It's also an opportunity. Technology-related deflation, or the reduction in technology costs, will lead to growth explosions and the creation of a wide range of new occupations that are currently unthinkable. These include people who have been upended and unable to adapt to new developments, such as internal combustion engines. However, there are a lot. Businesses that do not actively adopt AI to boost their own productivity and lower their own prices will be at risk. However, anyone who experiences price deflation, which we believe will happen to many businesses, will embrace new technology that will significantly boost their productivity. And in a recession, that's what always occurs. Innovation becomes popular. Businesses and consumers are willing to alter their practices when they are afraid, and we believe that they are becoming afraid. Therefore, we anticipate a significant increase in the adoption of technology in the years to come, particularly in the area of artificial intelligence. I'm going to end up where we began. AI is still in its very early stages. We believe it to be the most significant general-purpose technological revolution in history, and it still has a long way to go. The pace of change is significantly faster than it was before the Internet era, when Moore's law, which you know, states that in the realm of transistors and semiconductors, the same performance at half the cost every 18 to 24 months was the norm. These days, the modifications take 18 to 24 months to occur. Every 4 months, there are adjustments in performance for the same price. For this reason, we believe it's critical that everyone, whether they work for a company or are a leader in it, consider adopting or utilizing as many of these AI tools as they can in order to boost productivity. There is going to be fierce rivalry. The fastest adopters of these new technology will prosper. Let's discuss Nvidia. According to your analysis, the quarter was clearly a beat. Sales were up 94% year over year. But it was slower than the previous 3 quarters, which were simply spectacular. Of course, 94% year-over-year growth is fantastic. What do you think, though? Assuming, for example, that it was down somewhat today due to extremely high expectations. This was a huge quarter for Nvidia, isn't that correct? The most important lesson from the call, in my opinion, is that Nvidia is the engine that powers the planet. AI is booming, as Jensen stated. This is a multi-year occurrence, he added. AI training is not the only aspect of this. The goal is to migrate all of the world's x86 architecture, all of the CPU-based applications, to GPUs that are running machine learning over the course of the next 3 or 4 years. Therefore, I believe that the industry will need to come to terms with the fact that this isn't about training clusters in 2025. This relates to the GPU data centers that will be constructed in 2026 and 2027. Our numbers appeared for us. You witnessed that. Sell-side analysts, in my opinion, adopted their price objectives for the stock. We purchased it this morning while it was down pre-market. It was a blockbuster report, in my opinion. And it seems obvious to me that the world's Nvidias will continue to increase their market share while the Intels will continue to lose it. You must have Nvidia in your portfolio if you wish to wager on the tailwinds related to artificial intelligence. All right, so you're in second place now, right? Josh, after making some additional purchases this morning, how did you feel about the quarter? It goes without saying that you are well known for having been in this stock for a very long time. The way they kept everyone excited about Blackwell's potential, where orders stand, and the fact that demand is still exceeding supply, in my opinion, was really artistic. However, they didn't increase the level of enthusiasm to the point where they would be unable to win when they report again. Going forward, that will be the company's primary responsibility. It is currently the world's largest market cap firm. In the world, it is currently the most essential stock. They don't have to keep pushing themselves to perform better and better and better. It's more difficult than it seems since the revolution is real and they really have a very bright future. It is indisputable that GPUs will continue to dominate data centers. In that revolution, their market share position is likewise indisputable. They now have to do this every quarter, give people realistic advice, execute, ship products, and hit those numbers, while avoiding putting themselves in a precarious situation where the market expects them to double their revenue annually, which is obviously not possible mathematically. Everything is going ok so far. I believe Jensen is aware of the goal. I believe he has agreed to the mission. Everything I heard last night was good. The concept of the moat is the most crucial, and I'd love to hear Brad's response to this. New solutions from rivals are emerging. Production of Amazon's own Trainium 2 chips is increasing. They can continue to dominate the market, but they won't have it all to themselves for long. The ecosystem may benefit from the increased number of products available. I believe other Nvidia longs heard the same thing I did, and that's the tone that was established last night. What are your thoughts? That's all about the installed base concept, really. Jensen has previously discussed this topic, essentially in the same manner, and I believe I have already brought it up, of considering it similarly to Apple, who has a sizable installed base of its own. Yes, pay attention, the stock began the year at $49 and $50 a share. We're at $145 or whatever today, you know. Everyone has this wall of worry. Isn't that part of the reason the asymmetry is close? Amazon will have its own Trainium chip, along with custom AI keys. They will undoubtedly employ Trainium, as I stated in our most recent BG2 episode. It's a less expensive option for some clients. Additionally, Jassy has stated that he intends to purchase as much Nvidia as possible for as long as he can remember. They are aware that Nvidia powers the globe. Listen up, when we look at our price target for Nvidia next year, it's up 30%, rather than 100%, as it was at the beginning of 2023 or 2024. As a portfolio manager, I would say that we reduced the size of our holding. We started the year in a rather unusual position. We had a normal size stake going into this quarter, and this quarter we're adding a little bit to the pullback. However, for the next few years, we believe it will be a terrific compounder and a great bet on both AI and the replacement. The switch from x86 to GPU-based data centers.